Hello from Ireland. I'm going to spend a few minutes talking to you today about Irish Revenue's new compliance intervention framework, which was implemented on the 1st of May 2022. Firstly, I'm going to give you some background to the reason that we have developed and implemented the new framework. Some of you may be familiar with our statement of strategy, which essentially sets out the priority areas of focus for us as an organisation over the lifetime of the strategy. One of our current priorities deals with maximising timely compliance and sets out our commitment to implementing a revised framework of compliance interventions that support early and effective engagement based on the level of risk and taxpayer behaviour. The objective of the framework is to ensure that we have a consistent set of intervention types across all taxes and duties, with the exception of customs, and that the disclosure opportunities provided to taxpayers are more closely aligned to the legislation. Prior to the introduction of the new framework on the 1st of May 2022, compliance activity was done either as a non-audit intervention or as an audit intervention. In reality, the vast majority of interventions was done in the non-audit intervention space, regardless of the information held on the taxpayer. So in some cases, we are talking about us having specific information, which leads us to a fairly solid conclusion that a liability exists. In such cases, the fact that a non-audit intervention was used meant that taxpayers were essentially being prompted into making an unprompted qualifying disclosure and benefiting from the minimum levels of penalties. This was leading to inequities in terms of the treatment of compliant versus non-compliant taxpayers. It was not effective in terms of changing taxpayer behaviour, and it also led to difficulties in enforcing penalties for collection purposes. In developing the new compliance intervention framework, we've had to consider how tax compliance interventions fit within the wider context of our self-assessment system. Self-assessment works on the basis that it is the responsibility of taxpayers to pay the correct amounts of tax at the correct time. Thankfully, most taxpayers take this responsibility and are fully compliant with their obligations. We also acknowledge that even at times, even the most diligent taxpayers will make mistakes. And unfortunately, there will always be a minority who will seek to evade their obligations. So it's important that we, as Revenue, operate on a proportionate basis, whereby we offer opportunities for self-correction to those diligent taxpayers who may have made innocent errors, while ensuring we implement a graduated response to non-compliance based on taxpayer behaviour. The new compliance intervention framework provides taxpayers with opportunities to review their tax compliance position and to voluntarily address any issues identified. Taxpayers who avail of these opportunities will experience the minimum level of penalty and will not risk either publication or prosecution. This approach allows taxpayers to manage their tax compliance position in the most cost-effective manner. This graduated approach also allows for a clear escalatory process whereby we can respond progressively and with the appropriate vigour to taxpayers who do not comply or who do not change the behaviour which has led to the non-compliance. Revenue's mission is to fairly and efficiently collect taxes, and we do this through our twin pillars of service for compliance and confronting non-compliance. You can see from this slide that the intervention framework is integrated within our operating model and supports the twin pillars. As you can see from this slide, there are 3 intervention levels within the framework. Level 1 sits within the supporting compliance phase, Level 2 and Level 3 sits within the confronting non-compliance phase. The 3 levels reflect our graduated approach to risk and taxpayer behaviour. The framework will ensure that we pursue those who do not avail of the opportunities to self-correct or to make an unprompted qualifying disclosure. Under the framework, we will also challenge unintended uses of the legislation which threaten tax yields and the fairness of the tax system. Our priority is to recover any unpaid tax or duty along with interest and penalties. Within the compliance intervention framework, each intervention should be in the form which is most efficient in terms of time and resources. This slide sets out a high-level overview of the new compliance intervention framework and gives an overview on how the levels are comprised. We've used colours to illustrate the progressive response based on behaviour, ranging from green for compliant taxpayers through to red for serious cases involving evasion. This table sets out the objective for each level and ties back to the previous slide, with Level 1 in the supporting compliance phase and Level 2 and 3 tackling non-compliance. I mentioned earlier that the levels are aligned to disclosure opportunities, So it follows that level 1 aligns to the unprompted space, level 2 aligns to the prompted space, and level 3 aligns to the investigation space, where no qualifying disclosures can be made. In the interest of time, I'm only going to cover briefly how each of the levels work, and full information is set out in our Code of Practice for Revenue Compliance Interventions, which is available on our website. I should warn you, it's a lengthy document running to about 70 pages, but it sets out a really good roadmap of the tax compliance journey. So as I mentioned earlier, activities designed to support compliance fall within level 1. Where a level 1 compliance intervention has been initiated, taxpayers can address any compliance matters through self-correction or by making an unprompted qualifying disclosure as appropriate. They therefore benefit from the minimum level of penalties and don't risk publication or prosecution. This slide sets out the types of compliance activities which fall into the level 1 space and includes things like non-filer reminder notices, requests to self-review, or writing to a particular cohort of taxpayers in receipt of a particular type of income to remind them of their likely filing obligations and likely liabilities arising. This is clearly in the supporting compliance space, where we try to ensure compliance as well as changing taxpayer behaviour. Level 2 includes 2 intervention types: the traditional revenue audit, together with a new intervention type called a risk review, which has been introduced in keeping with the underlying principle that the choice of intervention reflects the most cost-effective approach for both revenue and the taxpayer. The risk review allows us to raise an inquiry on a particular issue or a small number of risks without auditing the full tax head and period. Regardless of the level 2 intervention type, taxpayers have the same corrective options. They can self-correct or make an unprompted qualifying disclosure right up until the point that they're notified of a level 2 intervention. Once that notification issues, they then lost the opportunity to make an unprompted disclosure, but they can still make a prompted disclosure right up until the point that the intervention commences. Finally, level 3 sets out the only intervention type in this category, which, as we said, is an investigation. This essentially prevents taxpayers from being able to benefit from making a qualifying disclosure. I think it's worth briefly covering the interaction between the levels and how escalation may work. The levels themselves are not necessarily sequential. Revenue may initiate an intervention at any level of the framework in response to a perceived risk. This may arise without any previous intervention at a lower level to the taxpayer concerned. And in certain circumstances, however, risks identified during an intervention may lead to a higher level of intervention. Finally, I'm just going to touch very briefly on how we have implemented the new framework. Change management has obviously played a critical part in the implementation of our new framework. We spent more than a year engaging with practitioners through the Tax Administration Liaison Committee, specifically the audit subgroup, in order to ensure that the changes are workable and well understood by agents. We also engaged extensively with our own staff in developing the framework and provided comprehensive tax training setting out the compliance policy, as well as detailed tax technical education. The focus now shifts to developing a robust quality assurance programme together with designing measurables which will help us evaluate the impact of the new framework. This concludes a very brief presentation on the framework. Thank you for your time and I hope you enjoy your conference.